Hello everyone, welcome to EduTap. So we were having this series, mega revision series of the commerce and accountancy, and today we are going to discuss our third part of it. Good evening everyone. So we have already discussed two parts in which we have till now covered 50 MCQs, isn't it? So today again we are going to discuss 25 more MCQs and the technique will be same, approach will be same. First we will read out the question. Then we will look at the underlying concept and we'll try to apply the concept in that question. Then we will look at the final answer, right? Okay, so first of all, before starting the first question, just let me know in the chat section कि my voice is clear to everyone and as well as the video is absolutely fine. Just let me know in the chat section. Okay, then we will start our class. And okay, all clear, everyone is saying. Okay, that's good. Chalo, start with the first question, and I am assuming and you are supposed to have the register and pen with yourself because this class is going to have a lot of numericals. So you need to do the questions with me, right? Okay, the first question says, which of the following is an example of composite ratio? So first of all, let's try to understand what is this composite ratio, then we will look at the solution. So underlying concept here is composite ratio. See, composite ratio is any ratio in which one variable, first of all, what is ratio? In which you have two variables, right? So composite ratio is any ratio in which one variable is from the profit loss statement and another variable could be from the balance sheet. So this type of ratio we call it composite ratio. Now let's look at the options one more time. Current ratio, the formula of current ratio is what? Current asset divided by the current liability. So all the variables are being taken from the balance sheet only. So it is not the composite ratio, right? So it would not be the answer here. Asset ratio again, liquid asset divided by the current liability. So it is not the answer. Debtors turnover ratio. Now this is your composite ratio. Why? Because in the numerator you take credit sales, isn't it? And in the denominator you take average debtor. You know the logic now, how to remember the formula. See, debtors turnover ratio. That means you are trying to find out how much debtors have been turned over in a particular year. So the denominator you are going to take average debtors, and in the numerator whatever credit sales you have done in a particular period or year, whatever credit sales you have done, they all are your debtors, right? So credit sales divided by the average debtor. So this is going to be taken from the PL account and average debtors are going to be taken from the balance sheet. So this is your composite ratio. Acha. One more question I want to ask you all. Tell me the formula of net profit ratio in the chat section. What is the formula of net profit ratio? Okay? Chalo, this you have to tell me. And the answer of this question is option number C. We have discussed that. Let's talk about question number 2. That is, which of the following, which is the solvency ratio? See, we have liquidity ratio and we have solvency ratio, we have turnover ratio, we have the profitability ratio, right? So let's try to understand first of all these type of ratios in a brief, then we will get back to the question. Okay? Now, liquidity ratio basically tells you what is the firm's ability to meet the current obligation. So it gives you the liquidity, short-term liquidity position of the company. Like we have the current ratio, we have the quick acid test ratio, quick ratio, right? And what about the solvency ratio? They basically gives you the long-term liquidity, long-term solvency. Like it gives you the proportion of debt and equity. So liquidity talks about the short-term solvency and solvency talk about the long-term solvency, right? What is the ratio of debt and equity, like that. Activity ratio basically reflects ki with how much efficiency you are utilizing your assets. So activity ratios are also called turnover ratio. Please remember this. Okay? Just like we have done the debtors turnover ratio. So these ratio basically tells you ki how much you are utilizing your assets and how efficiently you are converting those assets into the sales, right? So this tells you that. Profitability ratio is very easy. Basically, it gives you the idea about the profitability with respect to sales or cost of goods sold. Okay, let's get back to the question. It says, which of the following is a solvency ratio? So quick ratio comes under the liquidity ratio, so it should not be the answer. Yeah, debt equity ratio comes under what? It comes under solvency ratio. Now working capital turnover ratio comes under turnover ratio. Net profit turnover ratio comes under profitability ratio. Okay, so I have asked you a question in the previous question. Tell me the formula of net profit ratio. So let me check the chat section. Who all of you are correct, but I can see I haven't got any answer for the net profit ratio. Okay, that's really bad. You are not revising properly. What is the formula for net profit ratio? Very easy, huh? Okay, net profit divided by, yeah, now I'm getting the answers. Net profit divided by sales. Very easy formula, right? Okay, good. Good, Shruti. Okay, chalo. So I'll ask more questions in between. Huh? Don't think whatever I'm discussing, only these will be the questions. I will be posing few more additional questions to you. Okay, in between the class. Okay, now we have the numerical. You have to calculate quick ratio from the following information. First of all, what is the formula for quick ratio? That is liquid asset or quick asset divided by the current liability. Now, current asset is 4 lakh rupees and your current liability is given to you 2 lakh rupees directly. So current liability, you will place 2 lakh. Yeah. In the liquid asset, you have to find the liquid asset, but you have been given the current asset. Okay. Inventories. So inventory is not included in your liquid asset. They are the part of the current asset only. So from 4 lakh, you are going to deduct 20,000. That becomes your 3,75,000. Easy enough. Prepaid expenses also are not included in your liquid asset. So 3,75,000 minus 25,000. Again, it becomes 3 lakh. Land and buildings, we don't have to do anything with that. Share capital, goodwill, irrelevant point, right? So this becomes your 3,50,000. So you don't have to do anything else. Just have to divide it. 350 divided by 200. You will have your answer with yourself. It is very easy. So let me check the chat section. First of all, I have given you the whole formula, whole calculation. You just have to divide this. 350 divided by the 200. That becomes your 1.75:1. And I can see. Okay. I've got the answers from few of you. Just write na 3B. If you are saying B, I will not know you are giving me the answer of second question or third question, right? If you are giving the answer, right? Third B, 2B, like that. Okay. Chalo, let's move ahead. So 1.75:1. Let's move to the third question of the day. Again, a numerical. Acha, third question we have discussed. Let's move to the fourth question of the day. That says, calculate gross profit ratio from the following figure. So again, the formula is very easy. Gross profit is what? Gross profit divided by the sales, right? Now, gross profit is also being calculated through the help of trading account. You know, trading and profit loss account, right? So that's very easy. So whatever sales you have, see, I'll give you the format of, first of all, trading and PL account. This is the format, yeah. And you know this thing. This is debit and this is credit, right? You write sales here, you write purchases here, right? And then you write opening stock here as well. And you write closing stock here, or you can deduct closing stock from here as well. Okay. So how do you calculate this gross profit GP? Sales minus cost of goods sold. Easy enough. How do you calculate this cost of goods sold? Purchases plus opening stock minus closing stock. So you have been given the purchases, yeah, 3,50,000 plus opening stock. That will be your 4,20,000. Yeah, 3,50,000 plus 70,000 is 4,20,000 minus 35,000. So it is approximately, not approximately, but exact, I think 3,85,000 if my calculation is correct. Is it correct or not? You tell me in the chat section. Is it correct? I guess, yeah. So 3,85,000 we have as the cost of goods sold. So nothing you have to do now. Sales minus cost of goods sold you have to do. So 5 lakh minus 3,85,000. I guess it is 1,15,000. Yeah, calculation. You can do this mentally, or you can use the conventional method of doing that. I am doing it mentally. If I am wrong, you just tell me in the chat section. 1,15,000 is your gross profit. Sales is, oh, very easy question now. Sales is 5 lakh. Okay, now question is done. 115 by 500. You will have your answer for the gross profit ratio. And if you have to calculate in the percentage, just multiply it by 100. Easy. Okay, so 115 divided by 500. Everyone, I think, is correct. 23% we are getting as answer. And yes, fourth ka C, everyone is correct. Okay, that's really, really good. You know how to do this mentally and how to do this conventionally as well. You can calculate this conventional method from the conventional method by doing like this. Okay? Don't worry about the calculation. You can do it like this. I have done this mentally. Okay. Let's talk about the fifth question of the day. Again, it is asking you to find out the operating profit again. So operating profit ratio is also very easy. In the numerator, you will take operating profit. In the denominator, you are going to take sales. Okay, so how you are going to do that? Again, you have gross sales. Okay, you have gross sales. Sales return from the credit sales. Okay, question, this is incomplete. From the credit sales, you have some sales return as well. Okay, gross sales is given to you. Sales return is given to you. Cost of goods sold is given to you. Office and administrative expenses given to you. Selling and distribution expenses given to you. Very easy. See, what you need to do here, you have to calculate the operating profit. How you calculate it? First of all, the gross profit is already given to you. So you are directly going to take gross profit from here, that is 6,50,000, right? Here onwards, gross profit is not given to you, it is gross sales. Okay, fine. Then also it is very easy question. Cost of goods sold is given to you 4,05,000. Yeah, you are going to add other operating expenses in this cost of goods sold. That is your 50,000 plus 40,000. Just write it down. 50,000 plus 40,000. So it will give you total expense. Easy enough till now, very easy. Gross sale. So I'll write it here. Expense. Okay, total expense. Total operating expense, you can say. Gross sales is 6,50,000. Sales return is 50,000. So yes, sales are 6 lakh. Oh, very, very easy question now. Sales is given to you. Expense is given to you. 4,05,000 plus 50,000 is 4,55,000. 4,55,000 plus 40,000 is 4,95,000. So you have total operating expense, total sale. You will minus it and you will have your operating profit in the numerator. You will divide it by 6 lakh. You will have the answer. See, easy. So 6 lakh minus 4,95,000 we have calculated, right? So it gives you 1,05,000 as the operating profit. You will divide it by 6 lakh. The sales is 6 lakh. So the ratio is 17.5. Clear? So you have the answer as 17.5%. As I can see, most of you are again correct. That's really, really good. So if you are comfortable in numericals now, these are easy numericals. You just have to do the calculation approach. The thing is to apply the approach. How you apply the approach? First of all, you see what you have to find out. Then you should write the formula. What is the formula? Operating profit divided by sales. Then you try to calculate the numerator as well as the denominator. That's it. In each and every question, you are going to follow this approach. Okay, so we have done this question. Let's move to the next question. That is question number 6. Again a numerical, and let's see who do this first. You have to calculate dividend yield ratio. Again, very easy question. Net profit after tax is 4,80,000. So first of all, try to understand the formula. Dividend yield ratio. Very easy formula. Earning per share divided by market value per share. Then we will again read out the question. First of all, you have to remember the formula. Dividend yield. Okay, how much dividend you are earning as compared to the market value. So earning per share divided by the market value per share. So now you haven't been given the EPS directly. Can you see? You have been given the EPS directly? No. Earning per share is not given to you directly. Nowhere it is written. So you have to first calculate it. Very easy. Net profit after tax. So suppose this 4,80,000 is available for only equity shareholders, right? Now number of equity shares are 40,000. Just divide it now. Just divide it. So you will have 12 rupees as EPS, isn't it? So EPS we have found out. Okay, numerator you have got. Market value per share is given to you as 60. Oh, very easy question now. So 12 divided by 60, that is 1 by 5. 1 by 5 is 20%. So option number B would be the correct answer. And I can see again, most of you are correct. Shruti, Aanchal and Vinay. Okay, that's really, really good. Okay, approach is same. Nothing very difficult. So see, 20%. Okay. Let's move to the 7th question. Again a numerical. Okay, you have to remember all the formulas. Now you have to calculate debtors turnover ratio. What is the formula for debtors turnover ratio? Very easy formula. You have to calculate in a year how many times in a year you are turning your debtors into the cash. So in the denominator, you will have average debtors. Understand the formula. Na? By understanding the formula, you can derive the formula. In fact, you don't have to mug it up. Debtors turnover, and who are debtors? To whom you have sold on credit basis, isn't it? So in the numerator, you will have the credit sale. Easy. So formula is credit sale divided by the average debtors. Clear? This much clear. Now total sale is 1 lakh rupees. Cash sale is 20,000. So deduct 20,000 from the 1 lakh. That becomes 80,000. Now sales return from the credit sale is also 5,000. Oh, so that will not be counted as your credit sale. You have to deduct further 5,000. So deduct further 5,000. Easy. Opening account receivable, that is your debtors. Closing account receivable given to you. So you have to calculate average debtors. 10,000 plus 15,000 divided by 2. You will have 12.5 thousand. That is 12,500. Easy. Okay? You can calculate this mentally. 10,000 plus 15,000 divided by 2. You can do this mentally. 12,500. Okay. So divided by 12,500. Now it becomes 75,000 divided by 12,500. Now you can do this. 750 divided by 125. So 125, when you double it, it becomes 250, right? And when you multiply 3 by 250, it becomes 750. So 2 into 3 is 6. So I am doing this mentally. Okay? I am doing this mentally. You can use the conventional formula by cutting it down to 5 and all, but I don't do this. I don't do calculation like this. I use the shortcut formula, so I am just doing it mentally. Okay? So answer would be 6, and as I can see, most of you are correct again. That is 7B. Okay. Okay. If see, these shortcuts are not very useful for the SEBI Grade A, but if you have prepared for the bank examination, IBPS, SSC, then you all must be aware with these shortcuts. Okay? But don't worry if you don't know this, because in the SEBI they are not very relevant. Okay? Because in the quants you have only qualifying in nature, the paper one, and in this you can do this by the normal conventional way. Okay? And hopefully you are going to get the calculator in the phase 2. Hopefully, not very confirmed, but you are going to get that. We are assuming as per the pattern from the previous year question papers. Okay? Chalo. And if you don't get that, that's your luck. Okay, you have to do that by the conventional way if you don't know the shortcuts for division, multiplication, addition and all. Right? Chalo. Now the answer is 6. Let's move ahead. Question number 7th. From the following information, compute. Acha, this we have done. Yeah, 6 times is the answer. Question number 8th now. From the following information, calculate working capital turnover ratio. Very, very easy again. See, these are the turnover ratio. So you have to, I have told you in the beginning itself, ki what do these turnover ratio signifies? These turnover ratio signifies that how much you have used these asset to turn it into sales. So the formula is very logical. Sales. Okay? These are sales divided by the working capital. Easy enough. See, you have to understand the formula. Don't mug it up. Understand working capital turnover ratio. And what do we actually mean by this turnover? Turnover signifies ki how much you are turning this into sales. So that is very easy. Sales divided by working capital, right? So sales is given to you directly, that is 30 lakh. And working capital you have to find out. That is also very easy. Current asset is given to you 4 lakh. Current liability is given to you 2 lakh. So current asset minus current liability is your working capital. That becomes 2 lakh. Oh, very, very easy question. 30 lakh divided by 2 lakh is 15. Easy calculation. Okay? So see, now you have been given the additional information as 18 lakh. This is not very useful for this particular question. So you have to identify the relevant information. So question is going to give you additional information that will not be very relevant from the examination point of view, but you have to identify which data is useful for me, which data I can use in the question. So that's why I have always told you from the beginning of the classes, ki always look what you have to find out, even if it is written at the first place or even if it is written in the last. First try to read out what you have to calculate, then read the whole question. Okay? Chalo. Question number 8 we have done. Yes, the answer is correct. 15 times C, option number C. Let's move to the question number 9th. Again a numerical, and yes, everyone is correct in the question number 8. Now, profit available for equity shareholders. So you have to calculate price earning ratio. So very easy question again. You have to calculate price and the earning. Earning means EPS, huh? Now the formula again, earning per share is what? This is earning per share. Profit available for equity shareholders divided by number of equity shares. And what is price earning ratio? I have told you, when you compare the EPS with the market price. So first you have to remember the formulas. Market price per share when you compare it with EPS. Okay, I have told you this formula in the beginning itself. So market price divided by EPS. Price earning ratio is that. Now see, price is signifying basically market price. Whenever in the ratio price is written, just consider it as the market price. And earning, most of the time it is signifying the EPS. Now in the question, profit available for shareholders is given to you. Okay, market price is directly given to you, so that you can put it directly here. But now not in the EPS, but in the MP you can directly put 12.5. But EPS is not directly given to you, consider it X. Now to find out the EPS, you know what is the formula for EPS? Profit available for equity shareholders divided by the number of equity shares. That is also very logical. EPS, earning per share, total share divided by total number of shares. Okay, total profit for equity shareholders divided by number of shares. Total available profit is 1,75,000. Okay, number of shares we have is 70,000. You are going to do this calculation, so it will be around 2 point something. It will be around 2.5. It will be. How I calculated it? 72, 140. Rest is 35. 70 divided by 2 is 35. So I written 2.5. So EPS is 2.5. Let me check first of all. Yeah, it is 2.5. Now market price per share is also given to you 12.5. So you are just going to divide it and you will have the answer as 5. And let me check the chat section now. Who all of you are correct here? Question number 9th. Yeah, everyone is correct. Okay, only one person has given me the answer for 9th question. Why? Okay, chalo, koi nahi. Whoever has given me the answer for 9th question, you are correct. Okay, chalo, let's move ahead. Okay, clear? Question number 9 is clear. Question number 10th, again a numerical. So we are going to do a lot of numerical. So you should be ready with the register and pen. I have told you in the beginning itself. Debt to equity ratio is 0.5:1. So let me write it down here for you. Debt to equity 0.5:1. Okay, this is not the numerical. You have to identify which of the following transaction would decrease the debt equity ratio. Easy, simple mathematics question it is, not even the accounts question. So your ratio, how it would be decreased? When your equity will be increased, in that scenario, your ratio will decrease, or you have to tell na ki where it is going to decrease. So whenever your equity is going to increase, this ratio is going to decrease, or when your numerator is going to decrease, then also this ratio is going to decrease. Clear enough? Now let's read out the options. Issue of equity shares. Oh, the first option is correct itself. So you don't have to read out the other option. Okay, so let me check the chat section, and everyone is correct. Very, very good. Not everyone, but most of you are correct. Okay, let me just eliminate all other options for you because not everyone is correct here. Okay, chalo, let's eliminate all other options. We have to identify which is going to decrease this ratio. Second option says cash receipt from debtors. They are debtors. Debtors are not included in debt. Debt is what? We have given the, we have taken the debt. Long-term borrowings we have taken. This is what debt. Debtors are not included in either debt or equity, so it will be eliminated. Issue of debentures. Now, when you issue the debentures, yeah, okay, I think this question is wrong, or yeah, but the answer is one option is correct, that we know, but second option we have eliminated. Okay, I think there is a problem in this question. While you are issuing the debentures, you are indirectly increasing. Acha, okay, question is correct. You are increasing your debt. Oh, very, very good. Okay, so you are increasing your debt, and the question is asking what would decrease debt equity ratio. So question number, the option number C is going to increase the debt equity ratio. Are you getting the logic or not? When you have issued a debenture, Debenture is a form of debt, na? So your numerator is going to increase. So your debt equity ratio will be increased. Okay, so therefore some of you have given me the C answer. Now you have the clarity why C should not be the answer. Are you clear? Whoever has given me the C answer, are you clear why C is not the answer? Because question is asking you decrease in debt equity ratio, not increase. Acha, if the question would have been different, if it had asked you in which scenario debt equity ratio will be increased, then the answer should have been option number C. So look at the question very carefully each and every time. ठीक है, चलो purchase goods and credit, doesn't matter, none of the above. Okay, so option number A is correct here. Okay, before moving to the 11th question, that is again a numerical, right? Let's talk about the preparation part. So as we are preparing or we are discussing so many MCQs with the solutions, you need to do so many MCQs on your own as well. Okay, so for that we have this ultimate test series. And let me tell you this thing very confidently and very genuinely, I'm telling this thing, कि you need to have the test series with yourself if you want to clear the examination. There is no doubt about it. You need to practice more and more MCQs. That is the need of any government competitive examination. You can't be casual about practicing from the test series. So we have this ultimate test series for you, and that will be provided to you for the phase 1 and as well as for the phase 2. And what you are going to get into in that, you are going to have 12,000 plus MCQs and descriptive test as well, because you have the English examination as in the descriptive form. That's why. So you will get what? You will get chapter wise test. So whatever chapters you have covered, you can do the chapter wise quizzes, solve PYQs from each chapter. If any question has been previously asked from that chapter, you can practice that PYQ or memory based question. Current affair test you are going to get. Full length test for phase 1 you are going to get. Full length test, full length mock for phase 2 also you are going to get. So let me just take you to the website for a brief period of time, and I'll show you how you can get to this website. So in the Google or in the browser, just type EduTap, right? Then go to the courses and click on SEBI Grade A courses, right? Inside the SEBI Grade A courses, scroll down, you will find test series here for phase 1 and phase 2. Now, this phase 1 and phase 2 price is 9,000, but it will not cost you actually 9,000. Because why? Because you have the save 70 coupon code. Just apply the coupon code 70%, flat 70% off you will get. Achha, chalo, let's do the quants question. Let me check you if you can do this mentally or not. If you're getting a discount of 70%, what is going to be the price? Tell me instantly, mentally. Okay? Let me check all of your quants as well. Chalo, how I do it? I calculate 10% of 9,000, that will become 900. I will multiply it with 3. So that becomes 2,700, right? Okay, so let me check the chat section who all of you are correct with the quants question. So 30% of 9,000 is how much? 30%. Oh, your quants are so weak. 30% of 9,000 is how much? You are saving 70%, isn't it? So what will be the 30% of it? 70% is off, so 30% will be the price. So what will be the, yeah, now Subhanshi is correct. So you can do this calculation mentally because you have the quant section as well, right? And in the commerce and accounts as well, and in the costing as well, you will find several numericals. So you need to do good practice of that as well. Okay? Chalo, I have done the quant question as well. And if you want to have, if you want to do only practice for the phase 2, then again you will have 70% off for the 8,000 rupees. Achha, now tell me what should be the price. Instantly you have to tell me. Instantly. This 8,000 price is for phase 2. Not exactly 8,000. You will get the discount. So for the phase 1 plus phase 2, 2,700 is the price right now. I don't know about the future. But tell me if you calculate 30% of 8,000, calculate it mentally. Don't calculate in register and pen. This is very easy calculation. So let me check. Yeah, it is 2,400. Okay. So we are doing the quants practice as well. Okay, it will be 2,400. Okay, good. Chalo. So if you want to purchase that, you can go to the website and you can purchase that. Okay? And you can practice lot MCQs. Okay. Let's move to the 11th question. Now we have what? ABC Limited, New Delhi has registered its capital at rupees 40 lakh divided into 4 lakh shares of 10 each. Now, what is that? This is basically, okay, we don't know, acha, registered. So it is authorized capital. ABC Limited has registered its capital at rupees 40 lakh. Na? So 40 lakh becomes your authorized capital. Now let's look at the question. What the question is asking. Then we will read out the whole question. Question is asking, find the paid up capital of the company. Now while reading out the question, what should be your approach? Try to find out the information which is useful for paid up capital. Okay? Chalo, let's read it out again. The company offered to issue, that is your issued capital, to the public for subscription of 2 lakh shares of 10 each. That is 20 lakh is your issued capital, not the subscribed one. Company did not make the final call of 2 rupees per share. Oh. The company received all the amount called up except 2000. Very easy question now this is. 2000 shares has been called up and 8 rupees price has been called up because 2 rupees has not been called up, isn't it? So it becomes your 16 lakh, right? That you can do. Now, out of this 2 lakh rupees, 2000 shares, on 2000 shares, 3 rupees has not been received. Okay? So very easy, 2000 on 2000 shares, 3 rupees has not been received. So that is 6000. Easy. So you will minus 6000 from the 6000. So mentally you can calculate it. It will be 15,94,000. Easy. So let me check the chat section. Who all of you are correct, and every one of you is correct. That's really, really good. Okay, chalo. And how to show this in the notes to account? Very easy. Share capital inside the share capital. See, in the face of the balance sheet, you are only going to have share capital. But in the notes to account, in the annexures, you will have different items like this authorized or registered or nominal capital. So in that you will have authorized share capital as 40 lakh. We have discussed about that. Issued capital, you know 2 lakh shares have been issued at rupees 10 each. So that will be 20 lakh, right? Yeah. Okay. So this is your issued capital. Now let's talk about subscribed capital. So 2 lakh shares we have discussed, but only 8 called up. So we have done the calculation, 16 lakh minus calls in arrears, 15,94,000. Acha, now you tell me, this 15,94,000 would be in what? In which category? Subscribed and fully paid up, or we should write it in subscribed but not fully paid up. In which category we are going to write this 15,94,000? You tell me in the chat section. This 15,94,000 would be under what? Subscribed and fully paid up, or subscribed but not fully paid up? You tell me in the chat section. I am waiting for the answers. This is a very easy question, huh? Not very difficult question. Anyone? I'm still waiting. Yeah, good. Subscribed but not fully paid up. Yes, I have started to get the answers. That's really nice. Why? Because we haven't called the full amount. That's why. Okay. So see, subscribed but not fully paid up. Inside the subscribed capital, we have two subheads, na? Subscribed and fully paid up, subscribed but not fully paid up. So it will be included in the subscribed but not fully paid up. Okay, clear. Let's move ahead with the 12th question of the day. It says the amount of money received by the company on issue of shares in various installment is ultimately, very easy question. This is normal general entry you have to know. So whatever amount we are getting while we are issuing the shares, we are getting first application money, we are getting allotment money, we are getting first call money, we are getting second call money. So where this all amounts are going to get entered into, so what is going to be the entry? It will be credited to share capital account, it will be debited to share capital account, it will be debited to share application account, it will be credited to share application. None of the above is true. So let me check the first of all chat section, then I'll let you know the logic. All money, huh? All money. Yeah, okay. So few of you are incorrect, few of you are correct. Okay, so let me tell you the answer. See, ultimately whatever you are receiving, it will be transferred. It is a part of share capital, na? Obviously. Whatever money you are receiving on the issuance of shares, it is going to be the part of the share capital account, isn't it? So the answer would be credited to share capital. And why the capital account is getting credited? Because we have seen this in the journal entries. Whenever capital account increases, it gets credited. Chalo, one more question I want to ask you. When asset decreases, what do we do with that asset account? You tell me. Whenever asset account decreases, what do we do? Do we credit it or do we debit it to that asset account? You tell me in the chat section. Tab tak, till then, I'll just eliminate all other option. Debited to share capital? No, it would not be the answer, obviously, because share capital is always credited when it is increased. Debited to share application? No, not at all. Application? No. Yeah, I have got the answer for this question as well. Yes, so whenever asset decreases, we credit it. Okay, that's really nice. So the answer for this question would be option number A, and most of you are correct. Let's move to the 13th question of the day. It says, when the company issues shares at a premium, okay, premium account is credited to a separate account called security premium account, that we all know. Oh, the question is asking, it is shown under what? Very, very, very easy question. So face of balance sheet, if you know, you already know where you are going to include this security premium account. This is very easy. Huh? Title asset, so you can eliminate directly this. Security premium is a type of reserve. Okay? You can't include this in asset. Title, equity and liabilities under the reserve and surplus. Yes, absolutely correct. So you don't have to even look at the other options. But let's take other options as well to eliminate it. Equity and liability, non-convertibility, no. This is correct, but this is incorrect. Title asset, no. Okay, so I have got, let me check the chart section now. For the question number 13, each and every one of you is correct, and I'm really proud of you all. That's really, really good. Good. So option number B would be the correct answer. Chalo. We are not looking at the solution because we are already discussing it while dealing with the question. Okay? Chalo. Question number 14th. A numerical based question. A company purchased a machinery for rupees 3,80,000. Okay. As per the purchase agreement, 20,000 were paid in cash. Okay. So rest amount is 3,60,000. Right. Next question is saying, let's read out the question again. Rupees 20,000 were paid in cash. Balance is paid by issuance of shares of rupees 100 each. What amount will be credited to security premium account if the shares are issued at 20% premium? Very easy question. See, you have to pay 3,60,000 rupees. You are paying it in the form of shares. Okay. Okay. Now, question is saying to you, कि 100 rupees shares are there and you are issuing it at 120 price. 20% of 100 is what? 20 rupees. So total price at which you are issuing the shares are 120. So how many shares you are issuing? First of all, let's calculate that. So you will divide this by 120. Yeah. So 12 3s are 36 and 3 zeros. So you will have 3,000 equity shares. So you are issuing 3,000 equity shares. And the question is asking to you what amount will be credited to security premium account. Okay, let me change the question now. Acha, chalo, let's discuss this. Then I'll ask you one more question. So from this issuance of 3,000 shares, we are basically issuing it at 120, but 20 is the premium amount. So that will be 60,000. So 60,000 will be the premium amount. Let me check the chat section, and every one of you is correct. Okay, I have only got 2 answers here. This was very easy question, right? Acha. Let me ask you one more question now. What amount will be credited in share capital? You tell me now. We have calculated which amount we will credit into the share premium account, right? Now you tell me which amount we will credit into the share capital. Easy, huh? Question is easy. You have to tell me this thing. Chalo. Yeah, very, very good. Okay, very, very good. 3 lakh. See, that's very easy, na? We have done 20 rupees is going to get included in security premium. So rest amount is what? Rest amount is 100. So when you will multiply it with 100, you will get 3 lakh rupees. So even by not doing this journal entry, you can directly calculate the 60,000. You can directly tick the 60,000. Okay. Okay. Now let's move ahead. So what will be the journal entry? See how the journal entry will be done. Machine account will be debited by 3,80,000. Right? You have bought the machinery at rupees 3,80,000. Bank account will be, because you are paying 20,000 as cash right now. So that is your 20,000. And the rest of the amount you are paying from the issuance of shares. So this high life machine from which you are basically purchasing the machinery, it becomes your creditor. So they will be credited by 3,60,000. Overall amount is 3,80,000, but right now amount left is only 3,60,000. And how you are basically paying this? By issuing the shares, and you are issuing the 3,000 shares at 120 price. So share capital out of this 3,60,000, 3 lakh will be credited in share capital and 60,000 will be credited in securities and premium. Correct? So this high life machinery account will be closed down. Correct? Clear? Okay, no doubt. Yeah. Okay, very, very good. Chalo, let's move ahead. Question number 14th. Acha, this we have done. Okay. Question number 15th. When a company forfeits its shares, so let's understand first of all the meaning of forfeiture. Very easy meaning. Cancellation of shares, na. So you have basically asked for the you have asked from the potential investors to apply in your company's shares. They have applied for it. They have given us. Let's include us in the same team. Okay, we have the shares. We have asked our investors to apply for the shares. They have applied for the shares. They have given us the application money. Now we have allotted shares to them. Now we have asked for first call money. They have paid us first call money. Now we are asking for second call money, but few of them are not able to pay us the second call money. So we are going to cancel their shares. So when we cancel their shares, first of all, you tell me the answer of this question. If we cancel their shares, do we have to return the amount that they have already paid to us? You tell me in the yes or no. So I have changed the question now. Don't tell me the answer of this question. Tell me first of all, if we are as a company forfeiting or cancelling some shares, are we going to refund the money on these cancelled shares that we are cancelling right now, whatever amount we have already got? Answer is yes or no. Do we have to refund it? Yes or no? No. Okay, so I've started to get the answer. So everyone is saying no. That's really, really good. You don't have to refund the money because it's their mistake. They are not paying you the call money, right? So what do we do with this amount? We take it to the forfeiture account. Now you tell me the answer of this question. This forfeiture account will be what? The amount that has been paid, that we will include in the share forfeiture account because we are not refunding it. Logical? Easy? Now the option says share forfeiture account will be credited with paid amount. Looks correct. Let's read out the other option as well. Share forfeiture account will be credited with unpaid amount. No, incorrect. Share capital account. No. Okay, so the answer is absolutely A, and in fact I have got some answers as well. That's really good. Okay, so option number A would be the correct answer here, and this will be the entry. When you have, now understand these entries very carefully because it can be asked. See, forfeiture question can be asked in the examination, whether in the form of numerical or in the form of theoretical. This is important from the examination point of view. Now, first of all, understand this key. You have got the share capital amount. You have called it basically. So when you call it, you do what? You credit your share capital. Now you are forfeiting these shares. So obviously you have to reverse the entry. So these share capital account must be debited now with the called up amount. Understand this, with the called up amount only. Okay? It will be debited. And why it is getting debited? Obviously because while calling it out, you have credited it, na? That's why you have to reverse the entry for this cancelled shares. So you are going to debit it. Easy enough, logical enough. Now, for share forfeiture, I have already given you the logic. Whatever amount you have got, you are going to transfer it in the share forfeiture account. You are going to credit it, okay, by the paid up amount. Now, what else you are going to credit? Suppose you haven't got the money on allotment. Suppose you have called the allotment money, but they haven't given you the allotment money, and therefore you have cancelled the shares, right? So they haven't paid you the allotment money. So this unpaid allotment money will be credited by creating the share allotment account credit. Okay? And if they haven't paid the calls account, so obviously this also you are going to credit. Clear? So share forfeiture by the paid amount, and share allotment and other calls by the unpaid amount, and share capital by the called up. Clear? This is very important. You need to understand this. Okay? This is very, very, very important. Let me tell you that. Acha, one more question I want to ask. Acha, this will be taken care in the next few minutes. Don't worry. Okay, we have one more question with regard to the forfeiture. Okay, chalo. This question we have discussed, and the answer is option number A. We have done this. Question number 16th, again on numerical. I have told you that numericals are also important as far as forfeiture of shares are concerned. This question says, a company forfeits 200 shares of rupees 10 each, okay, on which rupees 600 had been received. Now, this has been received, paid up. Okay, and reissues these shares for rupees 1800, but the price was 2000, but you are reissuing at 1800. So where you are basically adjusting this rest of the 200 amount, you are adjusting it from the forfeiture account. We will see that, don't worry. Let's read out the question first. What would be the transferred, what amount would be transferred to the capital reserve account? Very, very easy question. Just understand this very carefully. Total share worth is 2000, right? You have received only 600. So whatever you have received, you are going to take it into the share forfeiture account. Forget about other entries. Whatever you have received, you are going to take it to the share forfeiture account. So share forfeiture account will be credited by 600. That you know. Now it says these shares, these 200 shares are reissued. Oh, these are reissued. Now if they are reissued, you have given the discount of 200. So this discount will be adjusted from this 600 balance in the forfeiture account. This will be, so share forfeiture account will be debited by this 200. So the amount left in the forfeiture account is now only 400, and that you are going to transfer it to the capital reserve account. So let me check the chat section now. Answer would be 400, yeah? And let me check the chat section. I'm getting something else. I'm not getting the answer here. Question number 16th. No one has given me the answer. Yeah. Yeah. Okay. I have got the answers previously. Okay. I have got something. Eligibility. No, we are not talking about eligibility and RBI. We are talking about the questions. Okay. Chalo. Now is the we have this. How much answer? We have the 400 as answer, and I have got few answers as well. Okay. Really good. Chalo. The entry would be like this. Share forfeiture account will be transferred to capital reserve, that is 400. Okay. This we have done. Okay. Question number 17th. When a company sanctions the issue of bonus share, now the question of bonus share, very important chapter. When a company sanctions the issue of bonus shares, what do we do? Revaluation reserve account is debited. You give me the answer. Share account, share capital account is debited. Do we do that? Is share capital account is debited? No, we don't do that, because we are issuing the shares. Share capital account must be credited, na? So it is eliminated. Revaluation reserve, we don't use revaluation reserve while issuing the, or you can say while sanctioning, in fact, while sanctioning the bonus share, we don't do that. Capital redemption account, reserve account, you know it better. Bonus to shareholders account is debited. No, it will be credited. Why? I'll give you the logic. When you are sanctioning the bonus shares to the potential shareholders, what you do? They become your creditor, isn't it? Because you now have to issue the shares to them. You have sanctioned the bonus issue. Now you have to, in the future, you have to issue the shares to them. So now they become your creditor. So they will be credited, not debited. So this will be eliminated. So the answer would be option number C, and I have got the answers. Now let's take the in-depth understanding of this question. Though I have explained the things to you. Now, sanction of bonus issue, how you do the journal entry while sanctioning the bonus issue. Understand this very carefully. These two becomes very, very important from the examination point of view. These two journal entries. You are right now approving the bonus issue, right? So what you do? You are going to take amount from the capital redemption amount. So you have to remember these accounts, these 4 accounts or 3 accounts you can say. This can be used for the bonus issue. One is capital redemption reserve account. Second one is security premium account. Third one is general reserve. General reserve and profit loss, you can combine it, right? Reserve and surplus, you can, general reserve you can call it. Together you can call it general reserve, okay? Or you can separately just segregate that into general reserve or profit loss, but they are the same thing, right? Okay, now, so you can take amount from these accounts. So these will be debited because you are going to use these amounts. So these will be debited, and now you have sanctioned the amount. You have sanctioned the shares to the shareholders. So now they become your creditors because you have to issue shares now. So they are your creditors now. So whenever creditors increases, we credit, right? Now when you are actually doing the issuance of bonus shares, that is very easy. This amount, this account, this credit bonus to shareholders account will be cancelled. It will be debited, right? And you credit your share capital account. There is a shortcut entry for that as well. When you combine these two accounts, what will be the entry? Direct, you can do what? Debit capital redemption reserve account, debit security premium account, debit general reserve to share capital, because this account is going to get cancelled anyways. So what you can write by combining these two entries: capital redemption debit, security premium account debit, general reserve debit, credit to share capital. Clear? Now, bonus shares should not be issued out of revaluation reserve. Very, very, very important point. Last time this question has been asked from this statement only. Okay, clear everyone? Okay. Now, question number 17, C is the answer. Yeah, we have discussed that. Okay. Question number 18th. Let's see who all can give this answer to me. Question is, which of the following statement is not true? Not true. Preference shareholders are given more priority over equity shareholders when it comes to dividend payment. Let's just reserve this option. Let's read out the other option as well, because we have to calculate not true. Let's look at other option which is not true. Preference shares do not have voting right. It looks correct. The rate of preference dividend fluctuate as per earning. Oh, this is absolutely incorrect. So option number A is also correct. B is also correct. Let's read out the D option as well. All companies do not need to issue. Yeah, this is also correct. So option number C is correct here, because we are talking about not true. So this is not true. So this will be the answer. Let me check the chat section, and yes, everyone is correct again. Okay, that's cool. Right, rate of preference dividend remain fixed. Right, we know this thing in the case of preference shareholders. Therefore, this would be the incorrect answer. So option number C is the correct answer, and every one of you is correct, and I'm really glad to see this. Okay, so you have to practice more and more MCQs. That's why we are taking this MCQ series, right? So just like it, है ना? Just like it. Then I will move ahead with the 19th question. Okay, done? Chalo. Just do that. It will take 3 seconds, 3 to 5 seconds. Okay, chalo. Let's move ahead with the 19th question. Which of the following is incorrect? Again, you have to tell me the incorrect option. Right shares. Now we are talking about the right shares. So existing shareholders have the right to this newly offered shares. Now, so this is called right shares. So right shares are issued to existing shareholders. It looks correct. The bonus shares are issued. Okay, we are talking about now again bonus shares. Bonus shares are issued when the companies don't want to disburse cash dividend. Yeah, it might happen, but bonus shares are not issued in lieu of dividends. But yeah, when the company has less cash, they just generally provide the bonus shares so that they don't have to disburse the cash. So it looks correct. Let's reserve this for now. Let's read out the other option. Right shares are issued on discounted price. This is also correct. Bonus shares are always fully paid up, None of the above. Okay, let me check the chat section first of all. Okay, you have got the answers, but I haven't got the correct answer yet. The correct answer is none of the above, na? I haven't told you that anyone is incorrect. We have to identify incorrect. We have to identify incorrect, na? See, first option is correct. I have told you the logic of B option as well, why it is correct. C option, I have already told you this is correct. Bonus shares are always fully paid up, obviously. Bonus shares are always fully paid up. None of the option is incorrect, na? ठीक है? See, correct, none of the option would be correct. Okay, right shares are issued on discounted price. Why, Shruti, you are saying it is not issued on discounted price? It is issued on discounted price when we compare it to market price. Though we can't go beyond face value. That is correct. That is correct. Yeah, Shruti. Now you are correct. It's issued less than the market price. So here discounted price means that only. So whenever we talk about right share, na, and in respect of right shares, whenever we talk about discounted price, we generally take the market price. So below market price we are taking it. Correct. Okay. Okay. Now you got the logic. Okay. Now, nahi. Rathore is asking, sir, bonus shares are also partly. Now they are also always fully paid up. Now look at the just comparison between right shares and bonus shares. You will have the clarity now, right? Meaning, right shares are issued on discounted price to the existing shareholders, and they have the option to agree or deny the offer. That is dependent on them, कि they are going to accept it or not. Bonus shares are provided free of cost. That is the basic difference. ठीक है. Prices, see, less than the current price. Bonus shares free of cost. Purpose, to raise quick and additional funds. And this to basically see what happens in the bonus shares now. You are providing it for free of cost, but the market capitalization before the bonus issuance and the market capitalization after the bonus issuance will be same. So obviously simple mathematics is this. Simple mathematics says what? If the number of shares are increasing, so a market price is going to decrease. So to bring the share price down, company can do this thing, right? Okay. Minimum subscription is required in case of right shares, but it is not required in this. See, bonus shares are always fully paid up. This can be partially or fully paid up right share, right? Clear? So option number E is the correct answer. You have now got the understanding basic difference between the right shares and the bonus shares. Okay, let's move to the question number 20th. It says Mr. B holds 4 shares in a company and is offered 1 right shares. His wealth position would remain intact. Yeah, it would remain intact, obviously. See, wealth remains intact means basically it is saying ki you will not have any profit or loss. Basically, don't confuse this wealth position by something else. It is basically asking ki you will not have any profit or loss even if the existing shareholders are getting the right shares. Market price will adjust itself, okay, and they will not have any profit or loss. But in which case, when the right is exercised, yes, when they have exercised their right, they will get the shares at the price lower than that of market price. So yes, okay, there will be no effect. When the right is sold, yes, they will. When they are selling their right, they will have some loss on the existing shares because the market price of the existing shares will go down after the right shares. That's what basic mathematics says, theoretically, right? But that loss, they will compensate it by selling their right to someone else. So if they are selling it, they will have no loss, right? So question is asking, would remain intact. It is asking would remain intact if. So we have 2 correct options. Okay. C option says nothing is done. This is incorrect. Either A or B. Yeah. So let me check the chat section first of all. Then I'll give you the answer. Okay. I have provided you the logic. Okay. So I have got the answers and every one of you is correct. That's really, really nice. And I'm proud of you all. Option number D would be the correct answer. Okay? Because this is correct, this was correct. So you can't have two options correct. Na? So therefore it is written either A or B. Either the right will be exercised or it will be sold. If nothing is done, he will have the loss. I'll tell you the scenario. Let's take the hypothetical scenario. Suppose you have 4 shares of 100 rupees each. So now it worth rupees 400 rupees. After the right issue, let's suppose it gets the value, just a hypothetical example, don't take it literally, okay? I'm not teaching you mathematics, I'm just teaching you commerce and accounts. So let's take after the right issue, it goes to 75 or 50, let's take. Okay, one right issue is not here. Whatever right shares are there, but let's suppose after the right shares, the market value goes down to 50. Now, if he doesn't do anything with the right, he is not selling it, he is not exercising the right. So what is going to happen to his shares? He got 4 shares, 4 into 50. Oh, he has wealth of only 200. So he has the loss. So if nothing is done, he will be in loss. That's the logic. Okay, why this is incorrect? Correct? Got it? Okay, that's good. Let's talk about the question number 21. अरे थोड़ा comment कर दिया करो वीडियो के बाद everyone, ठीक है? Just comment after the video ना कि how much you like the video. Otherwise, I will not bring the next video, ठीक है? We have one more part, fourth part. I want at least 10 to 15 comments ना. So many people are watching it live, right? And afterwards, so many people are going to watch it recorded format. ठीक है? चलो, just do the effort ना. If I am doing it, okay? ठीक है? Okay, I'll have the homework question as well for you all. Which of the following is or are correctly matched? Section 62 of the Companies Act deals with right shares. Okay, it is absolutely correct. You have given me the answer. Few of you have given me the answer itself. Okay, that's really good. Section 63 of the Companies Act deals with bonus shares. You have to remember the sections. No doubt about that. No second opinion about that. Okay? These are the important sections. 68, 69, 70 of the Companies Act. Yeah. They talk about the buyback of shares. Yeah, absolutely correct. So yeah, all are correctly matched, I guess. None of the above is the answer. So I have got the answers. Yes, absolutely correct. You all are correct. Let's move to the question number 22. Buyback of shares. Now you give me the answer. Now I'll not give you the elimination. I'll not eliminate any option. You have to give me this complete answer by your own. Let me check how your preparations are going on. Buyback of shares cannot be made from what? I'll just read out the option. I'm not going to eliminate any option for you. Okay. The proceeds of the earlier issue of the same kind of shares, free reserve, security premium account, both B and C, none of the above. Cannot. It is asking you cannot. Chalo, let me check the chat section. And I'm still waiting. Yeah, I have started to get the answers. And whatever answers I'm getting, you all are correct. Yeah, really, really good. Okay. So the answer would be option number A. You can't do the buyback from the proceed of same kind of shares that you have issued earlier. You can issue different kind of shares, take a different class of share, preference share you can issue debentures. From that you can raise the fund to buy back. But from this issuance of same kind of shares, you can't, whatever money you are generating, you can't do the buyback. Obviously, that is logical. What is the logic when you are, first of all, you are raising the fund by issuing the shares, then you are again buying it back. What is the logic of that? So company law doesn't allow that. Okay? So let's read out in detail. Buyback can be funded from what? Again, this free reserve. Free reserve means, I have told you in the beginning, when we were talking about the right shares, I have told you this thing, na? Okay, this includes your general reserve and the retained earnings. I have told you free reserves, security premium account, plus proceeds of the issue of any shares or other specified security. But buyback of any kind of shares or other specified security cannot be made from the earlier issuance of same kind of shares. So that's why we have eliminated that option. Okay? Correct? So everyone was correct, I guess. Yeah, chalo. Option number A was the correct answer. Very, very good. Now, question number 23. Which of the following is or are correct now? Okay, again you have to give me the answer. Capital redemption reserve is created out of profit of the company. I'm not going to tell you is this correct or not. You have to tell me. Capital redemption reserve account may be applied by the company, okay, in paying up unissued shares of the company to be issued to its fully members as fully paid up bonus share. Okay, so it is basically saying कि for bonus shares, can capital redemption be used? I guess yes. We have discussed that, but I'm not going to tell you that. ठीक है, C option. Purpose of CRR, that is capital redemption reserve, is to ensure that the companies maintain the capital base intact in the event of capital diminution. Diminution means in case of capital decrease. All of the above are correct. None is correct. You tell me what should be the answer here. Okay, I've started to get the answers, and I can see your preparations are really going good. Everyone is correct again. Okay, that's really good. ठीक है. So option number D, all of the above is correct. See, we have discussed this thing. कि capital redemption reserve, it's a kind of reserve, so obviously it will be created out of the profits. Now this capital redemption reserve can be used to in the bonus shares. We have discussed that, the sources of bonus shares. Remember, capital redemption reserve account will be debited, general reserve will be debited, security premium will be debited. Remember na? So we do this. Third option, the purpose of CRR is to ensure that the companies maintain the capital base. Yeah, it is the purpose of CRR, right? So yes, everyone is correct, and option number D is correct, and I am really proud of you all. ठीक है, I am happy to see that. Okay, सब लोग phase 1 में तो select, at least you are going to get selected in the phase 1 who are giving who are just watching these marathon series, and you are evaluating yourself. अच्छा, tell me in the comment section after the class is over na, out of 25 how much scores you have got. So if you are scoring above 18, so you can assume that your preparations are going good as far as phase 1 is concerned. I'm not talking about phase 2. In phase 2 we will have difficult questions, more difficult questions. Okay? But as far as phase 1 is concerned, okay, the numericals are with the numericals we have discussed today is at par with the phase 1 numericals. So if you are getting more than 18, okay, out of 25, 18, 20, right, then good. And if you are getting 25 out of 25, that's very good. Then you are good to go for the phase 2 as well. Okay, chalo, that's nice. Chalo, let's 23rd we have discussed. Now 24 is your homework. You have to tell me answer in the comment section after the video, not in the chat section. I'm not going to read it for you. Okay, two things you have, two homework question. This question and 25, a numerical as well. This you have to give me in the comment section after the video, and also you have to tell me ki how much you have enjoyed the video. Okay? Is EduTap is helping you in revising the key concept or not? Are you practicing enough or not? And plus your scores, including this homework question, out of 25, how much marks you are getting. Okay? Chalo. With this, we are I'm going to sign off. But before that, let me just give you again the brief of the website. In this, if you want to avail some free resources, so for that what you can do, go to the website, go to the free materials, go to the blog, and inside the blog you will find categories. Click on the categories and click on the SEBI Grade A. Okay? Inside the SEBI Grade A you can see multiple blocks here. Okay? Multiple blocks here. And you can read any of these blogs for free to understand about the strategies of the toppers, to understand about the interview experience, how you should be going in last 20 or 15 or 10 days. So you can do that. Okay? So all of these things you can read it for free. Plus PDF of this session, you are going to get this in the Telegram channel. So I hope you all have joined that. But if you haven't joined the Telegram channel, just scroll down in the same page. You will have this join the Telegram channel. Click on join now. You will be redirected to the Telegram channel, and from there you can get the PDF of this particular session and all the previous sessions, right? And the upcoming session as well. So I want at least 15 answer for these two questions because they are good questions. I am purposely including this. in the homework question so that I know ki are you doing it or not. So 2 questions homework question plus I guess 2 homework question and your scores plus how much this series is helping you, then only I'm going to come out with the next video tomorrow. Okay, chalo. Okay, thank you Subhanshi, welcome. Okay, I'm signing off. I'll be waiting for your comments, the answer of these questions plus the scores you are getting. Chalo. Thank you, tata, bye bye, take care and all the best for your preparation.